Good afternoon, this is Charles Kelly. How you doing? Well, you all heard, if you're in the UK, that there was a budget yesterday, and if you don't know what the budget is, it means that that's when the Chancellor stands up, usually once a year, but sometimes have interim budgets, and sets out what the government expenditure will be for that year and any new schemes they've got in mind, any tax cuts, that sort of thing. And obviously this is a very important budget because it comes on the back of the worst recession for 300 years, where the government borrowed 300 billion last year, where we've all been in that situation, the pandemic, obviously. So everyone was looking to him to see what he would do to stimulate the economy and continue saving jobs. Well, in case you haven't heard, I'll go through the main points. I'm going to put all these up on my Money Tips Daily website, moneytipsdaily.com. But I'll go through the main things. COVID-19 support has been extended to September, so people will still be on furlough. I prefer to see the people getting back to work quicker so that they don't have to be furloughed and paid to sit at home and do nothing, or paid by us, the taxpayer, not the government, but taxpayer, to sit at home while they're really still working on the side for their employer, who's benefiting from having 80% of their wages paid by the taxpayer. So I know there's a lot of fraud going on, put it that way. So that's what's happening there. Support for the self-employed will be extended to September, and they're apparently going to make it available to 600,000 more people. I know a hell of a lot of people that have slipped through the net because they didn't qualify, because their business wasn't set up early enough. It's ridiculous, really. If you've been in self-employed for a year and they say, well, you haven't qualified, then what do? They go on to miserly sort of universal credit. So hopefully that will help them. They'll get grants. So the access to grants will be widened in effect. A little bit of help with universal credit for people on benefits and working tax credit. Perhaps the more important thing for people on low pay is that the minimum living wage will be increased to 8.91 an hour from April. So that's a bit of good news there. Property investor takeaways. Well, the stamp duty holiday, as expected, it was all leaked beforehand, has been extended until June. So that gives 3 months really for people to wrap up all of the transactions that are in the pipeline. And it will mean no stamp duty liabilities on sale for residential buyers, not second home buyers or buy-to-let investors. No stamp duty up to £500,000. And this can save buyers up to £15,000, of course. So it's quite a substantial amount of money. You might think, well, who would be buying a house for £500,000? Well, in London and the southeast, around the M25 area, and much of the southeast of England, you go into Surrey and Kent, a lot of houses can be £500,000 touch, £600,000. So it does affect, and it's a bit of an obscene tax, really. It should be a lot lower. Why should somebody, buying a property to live in pay £15,000-20,000 of tax to the government when they're taking themselves off of the government's housing list? They're not a burden to anyone. They're not saying, I want a council house, I need social housing, I'm a key worker, I need social housing. They're just getting on with it and buying their own property. So why should they be penalised with tax? But that's the way it is. Once these taxes are there, they're very difficult to take away because the government needs to run the country. So rather than just saying, well, we're going to tax one thing, they just tax a load of things, and basically you can't move for tax. That's what's happened. So that's a bit of good news. The other thing is that they're bringing in a mortgage guarantee scheme, much vaunted mortgage guarantee scheme, to basically bring back 95% mortgages, but not immediately. Will be brought in next year. We don't know the details of that, but it looks like it's the sort of thing where the lenders will lend up to 95%, but a certain percentage of that will be backed by a guarantee scheme, either backed by the government or by private companies. Is this new? No. This was around in the 70s and the 80s when you could get 100% mortgage and more, 105, 125% mortgages, but they were guaranteed by an insurance company. But when the market crashed, I think it was around in the 90s, all these guarantee schemes were basically pulled. So then they never come back again. It might have been in the 2008 crash, I don't know. But the insurance companies withdrew these type of schemes so that they're not around anymore. But I'd like to see them come back because lenders have always lent up to 75% and felt safe. And this policy on top would mean that they would get their money back if you defaulted. We paid for these policies. It was actually added to the mortgage usually, a mortgage guarantee premium. It could be £1,000 or something. But at least it meant people could buy the house they want now rather than trying to save up for another 5 years. So that would be a good thing. UK economy, well, the economy dropped by 10% last year in 2020, but they're expecting it to rebound this year by 4% and in 2022 by 7.3%. Well, 7.3% would be like, China or the Philippines growing by 6-7% in a year. So I'd like to see that happen. It'd be great if it will. But 700,000 people have lost their jobs. We're nearly at 2 million unemployed, and unemployment will peak at 6.5% next year, they say, but lower than the 12% expected. And the UK will borrow a peacetime record this year of 355 billion. Oh, what's a billion between friends? I mean, when you think of a billionaire, that's a lot of money, isn't it? A billionaire can have enough money to live on for their life and their children's life and their grandchildren's life and probably beyond. If you think of previous billionaires like, the Rockefellers, their fortunes are still largely intact. I say intact, they're in trusts and not corporations, but charities and foundations, as they call them over there. And they're still very much pulling strings out there. So these fortunes over 100 years later are still there. Just like Bill Gates' fortune will still be there. He might give it away here and there, but there'll still be a lot of money left over. So when you think of 355 billionaires, that's how much they're spending in 1 year. America is putting in a fiscal stimulus program, printing money basically, of $1.9 trillion. Let's call it, I don't know why they just call it $2 trillion to build bridges, build roads, build infrastructure. Let's build and get everyone back to work. That's what they're doing. And then we'll pay for it in another 50 years' time. Why not? Let's print some more money. The problem is it devalues the value of the dollar. It devalues the pound, because if you just keep printing more and more and more of it, the cake just gets bigger and bigger, but all the slices get thinner and thinner. I don't know if that's a good analogy, but you know what I mean. If you just keep printing money and there's nothing else to back it up, it's just a piece of paper. It's just a promissory note. It just says, I promise to pay the bearer. It really is a bit of a mirage. But I'm not saying go into Bitcoin, because I think that's an even bigger mirage. But a lot of people are putting their money into gold. But, you can't go and buy your shopping with a bit of gold coin, can you? Go down to Tesco and say, here's a gold coin, fill up my basket. No. So that's what's happening there. Tax, no. They say there's no changes to income tax, national insurance and VAT. However, personal tax allowances will be frozen. Now, personal tax allowances are the allowances that you get before you start paying tax, which here is in the UK is £12,570. It's quite a generous amount. A lot of lower paid people have been taken out of tax almost entirely by these allowances, but they're supposed to go up each year with inflation. They are going to be frozen. So over the next couple of years until 2020, well, from April 22 to 26, they will be frozen. People will start to feel a little bit more pinched. They'll start paying a little bit more tax. So if you're earning the same amount of money, take home pay a bit less. Why is that? Oh, personal allowance has been frozen. Well, that's what's happening. So it's a way of clawing back some of the money to pay off the debt, I guess. They've got to charge somewhere. They've got to get this money back somehow. And if the economy is slowed down, they're not going to will not be getting as much money in corporation taxes and other taxes and spending taxes. High rates thresholds will also be frozen. You start paying higher rates of tax from 50 grand. It's still fairly generous. Corporation tax, though, will be hiked from 19 to 25% from April 23. So, all right, it's not for another couple of years, but it worries me that companies are thinking, hang on a second, if we invest here and we stay here for the next 10, 20 years, we are going to be paying more corporation tax. We prided ourselves on being a low corporation tax country, which the Conservative government have brought corporation taxes down, I think, from something like 29% under Gordon Brown to 19%. Correct? That might be wrong there, but it was up there in the 29%. And now they're putting it up to 25%. Commentators are saying corporation tax is going up by 6%. Sounds nothing, doesn't it? 6%, that's only a small amount. But actually, the tax burden is going up by 30%. If you're paying tax at 19% and suddenly you're paying tax at 25%, it's actually a 30% jump. So it's quite a hefty jump. And when I had a company, you get that corporation tax bill in each year, you have to pay it fast. They want their money. And it's quite a burden on top of all the other taxes that we all pay in business as well. I'm a little bit worried about that. That might put people off from investing. And already we've got companies who are perhaps thinking about leaving because of Brexit. And this seems like the wrong kind of move. But there you go. Maybe they'll change it in the next couple of years if things pick up. I don't know. But rates will stay at 19% for 1.5 million smaller companies with profits of less than £50,000. The stamp duty we've talked about. No change to inheritance tax, lifetime pension allowances. Most people are going to pay a little bit more tax as these freezing of allowances start to kick in, so that people will feel it. And as I said, higher corporation tax could deter businesses from investing or even staying in the UK. Now, there are some tax breaks which will apparently unlock £20 billion worth of businesses. These are tax breaks to invest, where you can deduct the investment costs from tax bills, and that will reduce company tax profits by 130%. So there's a way of companies mitigating these higher rates of tax by getting tax relief in order to invest. The government wants these companies to invest in new projects, new infrastructure, or new jobs, basically. So that's a good news. Incentive grants for apprenticeships will rise to £3,000. That's another £126 million for traineeships to get people reskilled. And that's a good thing because we need people to get skilled up in new jobs, particularly in IT and the digital economy. And VAT for hospitality will be remaining at the smaller 5% rate. There's lots of other details there. Business rates holidays will continue until June. There'll be a £5 billion grant to help businesses reopen, worth up to £6,000 per premises. So think about applying for that. A new visa scheme, which we don't know much about yet, to help startups attract overseas talent from overseas countries. That would be a good news to bring people in who can contribute to the economy in a way, because those sort of people will contribute. There'll be higher rate taxpayers eventually. They'll be paying taxes. Unlike bringing in people just to work in cleaning jobs and coffee bars, they're not going to be paying much tax. They don't really contribute that much to the economy, unfortunately. So the government will publish all these details in the next few days. These are where the announcements are made, but the detail comes later, and this will eventually become a bill and an act of Parliament. They'll be debated in Parliament over the next few days. Now, some property experts are expecting properties to rise on the back of things like the fiscal stimulus, printing money, and government borrowing, stamp duty holiday extension, historically low interest rates. Basically, we've got low interest rates. People can go out and buy a property and get a mortgage of 1%. Well, I was paying 16.25% on my first mortgage. And you've got the return of a 95% mortgage free-for-all, which will help not just first-time buyers, but all buyers buy a property. So that's what they want to do. They want everyone to want us to be a home-owning society, and that has slipped in the last couple of years. However, property investors should also look to relaxed rules in terms of planning laws and converting commercial buildings and repurposing old commercial buildings that are no longer of use into residential. Look at that. There's a lot happening in planning to make it easier, and that should be more of a boom than all this money printing, because there are opportunities there. I'll be talking about that in another episode. A little word of caution I've got really. Printing money on the scale not really seen since the last World War by the UK and America could lead to inflated asset prices. In fact, it's already leading to inflated asset prices. What do I mean by assets? Well, stocks and shares in companies have gone up in the last year, but enormously since the drop last March and April. Commodities, oil, copper, all the things needed to produce things are going up. And eventually that will filter down, won't it? Because if companies have to pay a lot more for their oil prices, their commodity prices, if they're manufacturing, their copper, metals, if these are all going up, what do you think will happen to their prices? They will go up as well. That's called inflation. So you'll be buying stuff from China. It now costs 2 or 3 times more to even send it over here. So I've noticed already, when you look at things, you're trying to buy some cheap electrical thing online, you think, hang on a second, that was only like £15 before. You could buy these for a tenner. Now they're £30 and £40, £50. So I've already noticed this anecdotally. So this will eventually filter through and lead to inflation. Property prices also rose by 8% last year for crazy reasons, really. But this is about all this money printing and extra stimulus going into the economy. So higher inflation then could lead to higher interest rates. Now, if this happens, the rates on mortgages will rise, definitely, and could cause serious financial issues for borrowers with large mortgages. It's easy now. People can go out and borrow £300,000, £400,000, £500,000 and think, well, that doesn't cost much, maybe £1,000 a month. That's really cheap. I pay more than that in rent. But if the rates go up by 0.5%, 1%, 2%, their payments could double or even treble. Then what happens? You're really up that river without a paddle, right? Up the creek without a paddle. And that's what happened to a lot of people in previous recessions. I remember at the end of the 80s, even before that, in the early 80s when there was a recession, my mortgage went up from 12 to 16%. I remember other recessions where rates went up very high and it killed people. It meant, there were loads of repossessions. I know loads of people who got repossessed. I knew lots of people who were made bankrupt. You could see in the papers at the back pages of the Evening Standard, you could see, well, all these people have been made bankrupt. Oh, I know that guy. Because they were really been hit by high interest rates. Now, governments in the last few years have kept interest rates down. They're historically low. We're almost going to have to be paying the banks to keep hold of our money in the near future. So we'll be into negative rates. But if they go up, watch out. So you don't want to be caught with a big mortgage and maybe a downturn in the economy and then rates going up, because they can go up very, very fast. In a year, they can just go bump, 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 bump up. Suddenly they're 1%, 2%, 3%, and the Chancellor stands up, I'm putting the interest rates up another 1%. Well, I saw it happen in one day where rates went, I think, from 10 to 12 and 12 to 15, and then back down to 12 in one day. The Chancellor was jumping up to try and save the pound. It didn't work. I think George Soros won that one. He made billions out of it. He broke the pound, literally. So just watch out there. I'm not trying to be a doomsayer, but just watch out there. Be a little bit cautious on borrowing too much money and really possibly being caught with your pants down. Just be careful. Companies can also get caught like this. So I think this printing money could lead to problems further down the road. But the government like to kick the can down the road because it means they all look good today, and later on we can worry about that another day. So this is, unemployment figures are high. They're going, and they're particularly hitting the 18 to 24-year-old bracket. So now is a time, I think, to learn new skills, particularly gear up for the digital economy, and think about maybe starting your own online business, which can be done virtually with no capital, unlike starting up a physical business like a shop or that sort of thing, which can be very, very expensive. So, but the question I asked you, have you ever tried to start an online business but then got let down by a software developer, the web developer, or you just got stuck on some technical point, you couldn't finish it? I've been there as well. Well, now there's a new free game-changing software called GrooveFunnels, which can help you launch your online marketing business and give you a product that you can sell immediately. And it could change your life. It could mean that you won't have to worry about that job anymore. You can fire your boss. You can travel around the world and work from anywhere in the world. So now I'm going to give you something very special. It's free access to GrooveFunnels software. This is the best way to build websites and funnels that I've ever seen. It's free for life. There's no games, no fine print, but only if you get in now, because they're going to change this free offer, and eventually you'll have to be paying $100, $200, $300 a month like you do for other similar things. But this is the simplest and best thing I've ever seen, because even I can use it, and I'm not a techie. But this will mean that you can literally set up this software. You don't even need to give your credit card. It's absolutely free. It's not like the thing will say it's free, but give us your credit card just in case, and after 30 days we'll start billing you. You forget about it, suddenly your money's gone. No, you don't even need to put in a credit card for this. So you can actually start building your own websites and funnels immediately with this software. What is a funnel? It's basically a sales web page, unlike a static website where it says, look, this is what we're offering. Would you like further information? Yes, click here. You go here. You might then go to an email list. Then you get sent an email with the details. It's about list building. It's about customer building. It's about selling products. And this system has it all integrated. Email system, shopping cart for taking credit card payments, building your list, building a membership site. It's all there in one place. So you don't have to keep tacking on other bits of software here and there. Well, I'm going to leave it at that. Have a look at it. Click on my link that I'm going to leave there. And literally, I think this could change your life. You've got nothing to lose, everything to gain. Click on the link and get the free account while it's still there, while it lasts. Honestly, they won't keep this up forever because eventually they'll be charging for this this thing, because this is during the initial stages. So GrooveFunnels, click on the link and have a great evening. This could change your life, literally, and then you won't have to worry about your employer or furloughs and this sort of stuff. Just get on this and get to it now. Click on the link now and sign up for this free access. Thanks very much for listening and have a great evening.